I don't think the 4-year cycle will hold.
Hmm.
I don't know if we'll get 10 straight years of green candles. That would be
Yeah.
great. But I don't think the 4-year cycle will hold. The reason for that is threefold. The first is one of the primary drivers, obviously, was the Bitcoin halving. That statistically becomes half as important every 4 years. So it's just a smaller force than it
Hmm.
was when you and I got into crypto
Yeah.
many years ago. It was just a much bigger deal. The second is the last two down wicks, 2018 and 2022, were during periods where they were aggressively raising interest rates. As you said, the highest, fastest interest rate increase in history. And if you look forward to 2026, I just don't expect that. I think we're going to see interest rates come down, as we just discussed. So I think that is moving in a different direction. And then the big thing is we just have this institutional capital that's going to move into crypto. I think it has to move into crypto. I think they can't stay at zero. And that's going to take 5 to 10 years. And so, if you look at the average month, there's like $4 or $5 billion of Bitcoin purchases by ETFs. I think that will continue forever. I mean, not quite forever, but for a very
Yeah.
long time until these institutions establish their baseline position. And as a result, I think that's just going to overwhelm the 4-year cycle. Do I think there'll be down periods and maybe even down years? Of course. But right now, do I think 2026 will be an up year? I do, because this institutional capital, nothing stops that train.
Yeah.
Nothing stops the debasement
Election year.
train. And those are two powerful forces.
Yeah. Yeah. It's in, yeah. Again, like you said, you already outlined kind of the Trump angle too. And again, it is midterms. It's like, it's the election year type of thing where it just feels like, looks like, sounds like it's, trying to juice the skids for, to do, have the economy, ripping and roaring. So all signs point to that.
I agree. Yeah.
Yeah.
Again, you don't have, it's not whether you think it's right or think it's
Right.
wrong.
Yeah.
You think it is. And that is the direction of travel, from the Fed, from Treasury, et cetera. So I
Mhm.
think that's what's going to happen.
So you kind of touch on 2026 a little bit, or, we just did a little bit, but what are you, in terms of going forward here, what are your, I just saw some announcements you guys had, with some exchange traded products, it looks like, stuff like that. What do you see just in the ETF, ETP landscape, what you guys are doing, just kind of in general, broad brush, like what do you see moving forward?
Yeah. So we're going to be launching a lot more exchange traded products. Obviously, investors love them. We've had huge flows into our Bitcoin product, huge flows into our Ethereum product. You can expect additional single asset products from us. Maybe the product I'm most excited, we're trying to turn our index fund into an ETP. We need the SEC's blessing for that. That would be a broad based, diversified exposure to crypto. I think that's going to appeal to a lot of investors, if and when we can get that over the hump. We need the government to reopen in order to do that. So stay tuned, but we'll see. But the biggest thing we're going to continue to do is just what we've been doing for the last few years, which is we do 15,000 meetings a year with financial professionals to talk about crypto, to educate them on what's going on, to give them our views on what's going to happen. And we're going to just continue to do that. Over time, that brings more and more people into the ecosystem. So, yes, more products, very excited about the index product, but mostly just persistent education on this asset class. Because if you learn about it, you tend to invest. That's been our experience over the last 8 years of doing this.
I want to go back to what we were talking about earlier, just with the gold stuff, and just BRICS, and China, Russia, and what's going on here. Obviously, Taiwan. There's so many different angles to this. It feels like, to me, and it's something I've been thinking about for a little while. And then I saw Jack Muller's Monday show he does, and he really kind of really pressed into this, which I found interesting, and probably because it was something on my mind. So it was kind of one of those things where it's like confirmation bias type of thing, but it really just was the side of and Saylor had even said this a few years ago too, of I think half serious, but half half joking, but half serious, of, hey, why don't you demonetize gold? Like, you could, we could just sell all our gold if we have it, sell it, and then buy Bitcoin with it. And it's a physical thing you can always get back if you needed to. Worst case scenario type of thing, which would not be great. But what do you think when it feels like things are just kind of lining up on, people are taking their their sides of the aisle, picking their sides of the aisle. They're betting bricks over here with this legacy, the physical world, and then, like we said, this digital world on the other side. Is that, is that what you see as well? Because it feels like that is the fight at the end of the day.
I love that. I mean, it's an interesting proposal. My gut tells me is that you're going to end up with both sides owning both. And I think the rational bet is to have a foot in both camps. And I think the sort of I understand the very aggressive game theory that would suggest that the U.S. should sell its gold reserves, but against that is sort of the practical. This is a last stop, bulwark against this other world. And I think probably the right answer is both. And I think you're going to see that on the other side of the spectrum as well. I suspect you'll see the gold first sort of central banks adding Bitcoin exposure over time. I think the right answer to that problem is actually to own both assets, and from a geopolitical perspective. And so I suspect that they'll do that slowly, but over time.
What I want to transition a little bit. What are your thoughts on just the treasuries, their treasury companies, and just kind of what's going on in there? Obviously, if Bitcoin price isn't going up, it's not going to be a super fun time for Bitcoin treasury companies and what's in that market. So what do you see in that world? What are you hearing? What is your prognostication, I guess, going forward when you kind of look out across the horizon?
Yeah, I think it's going to get very interesting on the digital asset treasury side. My view is they've been sort of treated as one class. You're like a Bitcoin treasury company. And I suspect what we're going to see is a lot more differentiation. My own view is that Bitcoin treasury companies should only trade at a premium to their Bitcoin if they're doing something exceptionally hard. If all they're doing is buying Bitcoin and putting it in a box, then my ETF does a better job than that of them because it's liquid and you can always get out at NAV. So if that's all they're doing, they should trade at a discount. But if they're taking that Bitcoin and they're generating a yield on it, or they're taking that Bitcoin and they're doing option overlay strategies, or they have a $70 billion balance sheet like MicroStrategy, and they're offering convertible loans, which is something I can't do, well, then those can add value. And for that, they can trade at a premium. What this means is I suspect you'll see some that are doing hard things trade at premiums, and some that aren't doing hard things trade at a discount. And I think an investor, as you approach these, the question to ask is, how hard is it what this company is doing? If it's hard, then maybe. If it's easy, then no. And I think investors will start to make that sort of differentiation.
Do you guys have any updates on the like the like kind redemptions, things like that? What's the kind of the word? Is that in one of those acts, the Genius or Clarity Act? Like, how is that? What's all going on with that?
Yeah, great question. So at an institutional level, in other words, when we interact with the largest institutions in the trading side, they can now do in-kind creations and redemptions of our Bitcoin ETF. So they can send us Bitcoin and we send them out Bitcoin. And that's great. That makes the ETF more efficient. It makes it more tax efficient. It means if you're a large individual holder, like a mega whale of Bitcoin, and you want to turn it into an ETF, you can probably do that in a tax efficient manner. What we can't yet do, and I would love to do someday, is allow individual investors to redeem Bitcoin out of an ETF. I don't think that's impossible, with quotes around the word impossible, but I think it's very hard. And right now it's not allowed, but we will continue to push for that. So it's happening at an institutional level. It's not happening at a retail investor level yet. But I would love to make it happen if we could.
If you like that clip, then you definitely got to check out this next spicy clip. I think you're really going to like it. Come on, check it out. But if you want the full version, the full interview, then check that out over here. Come on, do it. I'll see you in there.